Good evening, everyone. This is Rodney with the Triton Wave Market Timing Strategy for Wednesday, September 5th, 2012. I hope you all had a good rest from the holiday weekend, Labor Day weekend, and I was hoping that today would see some more volume pickup, but it's still only 639 million shares traded. So let's take a look and see what the S&P futures are doing. On Sunday, Friday's action was it came down, the ES came down and hit the 21 period moving average on the daily on the left-hand chart and closed near the highs of the day. On Sunday, when it opened for trading on the Asian market, it came down and hit the 21 period moving average. It was down about 8 handles and then managed during the daytime today on Tuesday to move back up above the 8 period moving average. Now, after the close of trading, the overnight session, we're down at 300. We're down 3 handles, 3 points, and it's 7:45 Central Time. So I wanted to bring over a chart and show you what the Aussie yen cross is doing. Now this is a 15-minute chart, but let's look at the daily here. So this is divergence going on because after the high tick here on March 19th, 2012, and the low tick on June 3rd, 2012, 50% retracement happened right about the high of the Dow on August 20th. So it's been 10 days and the Aussie yen cross has been going down. Now this is an indication. I had a sell on this at 81.97, and it's gradually taken out these lows on a daily basis, and now after the market close, it's still trickling down. So it's about to take out the lows established July 24th, 2012. And if it does that successfully, it's going to take it all the way down to the lows of June 4th or June 5th. So what does this mean? This means that the Aussie yen represents a risk on, risk off trade. You borrow cheap dollars from the Japanese banking system at 1/4%, 1/8 of 1%, and then you go plow it into the stock market, you plow it into the Aussie dollar that's paying more. What happens is when the risk, that's risk on, and that's this move from May 31st all the way up to August 21st. Risk off is you take money out of the stock market, you get your money back, and you buy the dollars back that you buy the yen back that you borrowed. And that's what's going on here. So that's the dichotomy that's going on in the stock market. The stock market keeps finding its way moving a little bit higher each day or sideways. In the meantime, the Aussie yen, or risk off, is taking place over an 8-day period. So this dichotomy cannot continue, and it's going to have to break some way. Now, let's get rid of this here. What I think is happening is there's a mentality that's going on that as long as the market keeps going down, there are some buyers that are coming in. But the big guys are playing the Aussie yen and risk off situation as though the dollar as though this market is done and they are out of it, and they're just looking for the little guy to feed them trades so they can short the market. So if we look at what's happening on the 21-minute, it's mostly chop going up and down and up and down. It took a big hit this morning, came back up, and it's really still going sideways with minimal volume, and I don't think everybody's come back from vacation yet. But we will see a 20 handle day on the downside. That's how I'm playing it right now. All right, regarding stocks, let's look at Goldman Sachs first. On the daily chart on the left here, it looks like it's still inching its way back up. It's moving through congestion here. Moved through the. It's kind of riding a line above the 8-period moving average, exponential moving average, and it looks like it wants to hit 108. If it closes above 108, it's going to 115. And the 21-period moving average is supporting that right now. Taking a look at Amazon, Amazon's doing the same thing around the 8-period moving average. T1, T2, T3, T4, T5. All the waves are above zero. There's little or no change on the 21-period moving average, and that's just going sideways to up very slowly, very methodically. There's no indication that that's ready to come down. Okay, Netflix had a nice. We had a sell on Netflix at 61. Actually, it's 61 when it crossed over 2 trading days ago at 61.70. Put out a sell on that, and that hit the target right on the opening, $53. So you should have taken half off, book some profits, and let the other half ride. So let's see where the possibility of this is going. This is probably going to take out its new lows. We'll put a fib tool on this, and okay, so with the half that you still have left, target is $43.89 or $44. So that's the next target on this. Again, you should be half out and let the other half ride, and put a stop at 60.94, 61. Okay, Apple is doing its own thing. All the waves are above zero. And the 21-minute chart, they're all going above zero. So I am actually playing Apple not based on what the waves are doing individually on Apple, because it looks like it's a runaway stock. I'm playing Apple based on what I think the market is going to do. So I am taking heat on Apple. I still have it, and I have it on the short side. All right, MasterCard is just moving sideways. It's moving with the market. It was up 2 points. It was down 3 or 4 points at one time. It finished up 148. This is also moving with the market. This is also, I still have a sell on this, and I expect this to sell off with the market. Let's take a look at GLD. If you remember correctly, in past videos I've talked about GLD moving the waves, all the waves moving either above zero or towards zero, and the cash price was not breaking through the congestion of all the exponential moving averages. And finally, when it broke through, I said if you get a chance and it comes back and hits the 21 EMA, that's the time to get in. So if you played this correctly, you were in at 160. You rode this up on Friday's almost 4-point move, and you're still in it. So let's get a target in here. It's too late to play. It's too late to play it now, but I have a target of, it's 164.48 on the close. I have a target of 170. 170, take half off the table. So, and you can see even on Friday's move, it moved. The wave started to go above zero right after the opening. So even if you missed that other entry, you were in at 162, and it's 164.50 right now. Okay, Google, lastly but not least, Google, it seems to be tapering off slightly. It's got this overhead resistance, a trend line that goes back all the way to December 2009, which is a tremendous overhead supply of stock. Also, if you remember, about a week and a half ago, I took a short position on Baidu based on the waves peaking as they are now on Google, and it's doing the same thing on Google right here as it's hitting an overhead supply that's 2.5 years old, almost 3 years old. So this peaked on August 20th, and it's starting to roll over again. And on the right-hand chart, on the 21-minute chart, let's see if we can nail this here. It's been a little choppy. Right now, the 21 period moving average, T1, 2, 3, and 4 is below zero. T5 is halfway below zero. So I still like Google's going to chop around and play the same direction that the market is. And I have a target on Google. It's 681. I have a target, an immediate target of 670. I hope that helps. Good luck trading tomorrow on Wednesday, and see you at the next update.